Ladies and gentlemen, we have the FOMC decision, the interest rates decision, in 11 hours from the time of me recording this video. And a lot of people are focused on the macro. They're focusing on whether this will lead to a market top. They're discussing rate cuts, whether it will lead to a left translated cycle. I've talked about all that in multiple videos on this YouTube channel. I think, just to recap, the left translated cycle theory, which is the theory that we're going to see a Bitcoin top this year, is weak. I don't think it's very supported by much evidence. I'm not ruling it out entirely. I don't think I can do that actually, but I am saying that I need more data in order to confirm it's the case. I think there's a lot of misconceptions between causation and correlations here when we're looking at data points from previous bear markets and traditional markets and applying that to Bitcoin. But regardless of that macro analysis, because I did that all yesterday and you can find it in my channel yesterday if you're interested, I want to look today into the medium-term and short-term effects of this FOMC decision, because Bitcoin, in my opinion, is actually not in the best medium-term position right now. It's very nuanced, right? Bitcoin, technically speaking, is in a decent medium-term position. It's technically on support. It's technically above its indicators like bull market support band, Gaussian channel, Ichimoku cloud, all of these things. Yes, it's above those levels. So that's good news. And holding above those levels is going to remain to be good news. But there is kind of a hidden structure here on Bitcoin that a lot of people aren't looking at that actually poses quite a threat. And that is this particular ascending wedge formation. We're going to discuss all of that in this video today. It's going to be a quick one. I've only got one real point to make here today, and we'll get into it now. So without further ado, let's check out a couple of exchanges and then we'll dive into that content. I'm not going to waste your time here today. Right, two exchanges, the Bitunix exchange and the BingX exchange. Functionally, these exchanges are exactly the same. They are both global non-KYC, they have both never been hacked before, and they are both very low in trading fees. So take your pick, right? Look into them, see which ones you like, take your pick, and use my referral link down below. With that referral link, you will get a 15% trading fee discount for every single buy and sell you make on these exchanges for your entire life, right? That's exclusively with my link down below. It does not hurt to use that link. You're getting discounts. You're saving hundreds and thousands, maybe even thousands of dollars. So check it out down below. Use my link. Get on those exchanges. Help out the channel. Help out yourself by getting on a good exchange. Guys, let's get into the content, right? So as I said, quick video today. I've only got to make one real point to make. If you want my kind of longer term analysis, just go ahead and check out yesterday's video. I discussed everything you might want to know about on the longer term. Today, what I'm discussing is the fact that, well, FOMC, as we know, leads to market volatility, right? Unfortunately, Bitcoin doesn't really have much room for volatility right now, okay? Bitcoin and Ethereum as well have done quite good things over the last couple of weeks. What they have done is they have moved upwards from the bottom of their ranges. In fact, Bitcoin went below its range. Bitcoin went all the way downwards and it actually retested this support line right here. A support line stemming backwards 5 years from 2019. A support line that led to the bottom in 2021 July and the brief bottom in February 2022, a support line that led to the ETF top, led to the support zone in February, through which we were able to leverage a bounce and go to all-time highs from, led to the bottom here, again, in 53K, right? So Bitcoin bottom 53K at that support line, and we'll bring that support line back up later because it's still going to remain relevant to us in this video. Ethereum bottomed out at the bottom of its range. It didn't see quite as harsh of a drop. It bottomed out at the bottom of its support range. Fact of the matter is, ever since those bottoms on Bitcoin and Ethereum, they've been moving upwards, right? They've moved upwards, not only, out of danger, not only away from their supports, but actually above their mid-range levels. So Bitcoin and Ethereum have very similar charts right now. What you can see is that Ethereum moved above its mid-range level. It's holding onto it right now desperately. And Bitcoin is doing the exact same thing. It moved above its mid-range level and right now it's holding onto it desperately. So a lot of people are looking at this and they're saying, okay, look, Bitcoin's above its mid-range level, cool. It's maintaining an upwards trend, cool. They're looking at the indicators, as I mentioned, bull market support band, 50 SMA, 200 SMA, all of these things. And they're saying, okay, Bitcoin's holding all those things. Therefore, the medium term's in a good position. And they're not wrong to say that. The medium term is in a good position right now if we're looking at at a blanket black and white statement. The problem with the medium term is we are seeing signs of exhaustion. Are these signs of exhaustion bad? Yes, they are bad. Are they detrimental? Are they guaranteed to destroy Bitcoin? Not at all. Not at all. And they're not long-term signs of exhaustion. They're short-term signs of exhaustion. So we'll look into that now. They outline themselves the best on a purely pattern-based level. What we have on Bitcoin, believe it or not, and no one is talking about this right now, is a massive ascending wedge formation stemming back from the start of the month. That is not good news. Ascending wedge formations are some of the most bearish structures you're going to come along in the world of TA, essentially. And it's a pattern of exhaustion. It represents buying pressure diminishing over time. You can see the tightening. It's kind of a cone formation. The tightening of that cone means that towards the end of the wedge, it becomes incredibly unlikely for an asset to break to the upside, right? The asset essentially is likely to break downwards at about a 76% probability. Now, does that mean we're certain to break downwards? No, and this is why it's important that we do some good things here upon the FOMC release, because we are currently at the bottom of that wedge. So this is where I'm getting concerned now. If we see the FOMC release come in bearish or have a bearish effect on the market somehow, right? That will lead Bitcoin to break this ascending wedge for downside. And in doing so, we could very well break the mid-range level for support, okay? Because we're not only at the bottom of the wedge, we're at the bottom of the mid-range level. And we're also at the top of the bull market support band. So if we break, if we have a bad FOMC, we break the wedge, we break the mid-range level, we break the top of the bull market support band, and we plummet downwards once again to the 63.8K zone. Now, the problem with going back there is if we go back down to the 63.8K zone, let's zoom into the shorter term chart so we can see what's going on there. If we go back down to the 63.8K zone, just bring up 4-hourly chart, what we do is we form kind of this massive formation, like this, almost like a double top formation of some sort, or maybe even some sort of broadening ascending wedge, right? Rising, broadening ascending wedge. Not good, not good, right? So there's really no scenario in which Bitcoin going down here is going to end well for the medium term time frame. If Bitcoin breaks this wedge, we go down below the center, the mid-range level, we start testing those indicators again, and we form a very bearish structure in doing so, which threatens Bitcoin to break down once more on a much larger level and form this kind of rounding top formation, right? So, although we've seen great price action over the last few weeks, we're seeing Bitcoin literally up 30% or more in the last few weeks. This is really good stuff. It's undeniably good. We actually aren't out of the woods yet. We're not out of danger yet. We are still at threat. And this pattern, this ascending wedge formation, outlines that very clearly. Now, I believe that Bitcoin is macro bullish, right? I'm macro bullish on Bitcoin. I do believe we will see a bull market, right, to continue. I believe we will break all-time highs. I believe all of that while saying this. I'm not sitting here saying I'm bearish. I'm not. We are still within the structure. What I'm saying is that we cannot really afford to break down from this structure in any real level. Can we afford to see a wick below it? Yes, we can, right? But if we break down from this structure, it starts to become really nail-biting price action, right? We really have to hope that if we break down from this structure, that these indicators can take another retest. And it's not certain that they can. They've already been retested on 2 separate corrections in this region. There's no more room for another higher low, right? We would be forming equal lows for the 3rd time after 2 separate peaks, which is not a good structure to be in, right? That's what we tried to do over here. 2 separate peaks, we formed equal lows on 1, 2, 3 occasions. On the 3rd occasions, we broke down, right? That's not an ideal structure. So it is becoming a little bit concerning here, especially when we see Bitcoin making gradually higher highs and the RSI making gradually lower highs. That is a textbook pattern of exhaustion as well. We've even got a kind of descending wedge here on the RSI as well on the daily chart. So a lot of things are showing us that Bitcoin is running out of steam. And I'm just really hoping that this FOMC decision can renew, kind of, throw another load of coal in the furnace and give Bitcoin some more power to move upwards. Again, I want to make sure you're really clear about my position. I am not bearish on Bitcoin. I am not saying that this is going to be a breakdown. I'm not making this video saying we're going to break down here. I am on the fence about the medium-term price action, right? Short term, I'm on the fence. Medium term, I'm on the fence here. I can't be off the fence. What I am on the off the fence about is the long term. I'm long-term bullish on Bitcoin until proven otherwise. I believe the macro environment is still very, very bullish. I don't see a reason at this point why Bitcoin should not go to new all-time highs, probably within the month of August. But this medium-term chart is a bit concerning. I'm not going to lie to you. I'm just going to say it outright. This is a pattern which you definitely want to be watching over the next few days, right? And especially today with this FOMC decision. So that's all I'm saying here. I'm not sitting here saying to run from the hills. I'm not sitting here to say to sell. I'm not selling. I'm not running for the hills. I'm just saying you got to watch this, right? Because this is important and a lot of people are ignoring it. Because a lot of people, I'll tell you what, are getting very comfortable here. We've been in this range for 5 months. For 5 months, not too much has gone wrong. We had a couple of weeks of bad price action, right? But, when you're in a range for 5 months, people stop doing TA. They just start waiting They just start not really checking the price and just waiting around and just waiting for things to happen, other than actually analyzing and adapting to new data. I'm not trying to fall into that trap. Now, again, I'm macro bullish. What is my macro bull market invalidation zone? Very simple. My macro bull market invalidation zone is this line, this yellow line stemming back from 2019. Why is that? Well, that's because that is the line that led for us to bottom right here. That is the line that has divided bull markets from bear markets for the last 4 separate years. In fact, 5 years. In fact, 6 years. It goes back to 2018 as well. I just haven't drawn it out, right? It divided the 2018 bear market from back here in 2018, from the 2021 bull market, from the 2022 bear market, from this bull market right now. If we break that yellow line, I'm out. If we break that yellow line, I think we're in a bear market. Good news is that yellow line is quite far away. So it's going to take quite a lot for me to be macro bearish. It's down here at like 54, 55K. It's going to take quite a lot for me to be a macro bearish, but I'm not afraid to be honest about the medium term right now. It is a little bit dodgy, and we need to watch it quite closely. Let's hope and pray that FOMC comes in good, and we see a swing back to the upside here and break this descending resistance line in yellow and start attacking all-time highs again. That would be the ideal scenario. So let's see what happens here, guys. Just wanted to bring it to your attention. I hope you enjoyed the video. Thank you for watching. Please don't straw man my argument in the comments. I understand seeing a red title, the color red in the thumbnail is a little bit concerning, but that's just how YouTube works, right? You have to do it. What am I going to make it green? It's even more misleading if I do that. So thank you for watching, guys. I hope you enjoyed. Again, the exchanges, Bit2Nix, BingX, Global Non-KYC, never been hacked before. My referral links are down below for 15% trading fee discounts. Check it out. You can also check out my VIP group on Telegram. I trade altcoins 4 times a week. I post altcoin trading signals to the members in there. You're not only getting the altcoin trading signals, you're also getting a group chat with other members. So you can discuss the market. There's 120 people in there. You can discuss the market, post your charts in. You can share ideas with others. It's very useful in there. It's been very insightful over the last few months, especially. We've been running this group for about 2 years now, and we've got a trading track record PDF with all of our historical trading results. Every single trade we've taken, every single win, every single loss, it's all in that PDF document. So check it out. 78.39% win rate. Very good stuff. Right. Final thing. The Crypto Academy's Become a Trader 10-unit course is on sale. This is a course similar to a university-style course. It's PowerPoints, videos, worksheets, right? Charting formations, patterns, all this stuff. We're showing you in this course 30 hours of content for a very reasonable price. And on top of that, it's on sale. So if you want to read up about it, it's all there on the website. You want to learn how to TA, you want to learn how to do TA, you want to learn how to trade, this is where you can do it, right? We're teaching you how to trade as traders, teaching traders. So very useful stuff in there. Guys, check it out. Thanks for watching. Hope you enjoyed. I'll catch you soon.